So the key difference between these two charts is that the one on the right, the live one, the one that I'm trading with, what it does is it waits until the market gets either to a low volume node or the value area edge, and then it issues a prediction under certain conditions, and the conditions are related to the price action. Okay, so these are the sort of original price action patterns that I developed, before I introduced the concept of volume profile to this. Right. I noticed that at low volume nodes in particular, the price action patterns often don't have time to develop before you've moved away from that node. Okay, and so I changed the code on the left to use simplified patterns at low volume nodes. Okay, and I really liked what I saw. So then I took the same change and I applied it to the edges, and I don't like what I see. All right, so and we'll talk about this on Saturday. This is kind of the key finding over the last 2 weeks. The move to a low volume node is a relatively rare occurrence compared to the move to an edge, and the simplified price action that I'm using at the low volume nodes is not serving me well at the edge. So I can see that that has to get fixed or changed. So that's the difference. The difference is that the pattern that I'm looking for is to issue a prediction is different, and then underneath all of that is that the machine learning, the model that's been built that looks at those patterns is different, and it should be better because it is specific to that kind of location. So there's a model that looks just at low volume nodes and a model that looks just at the value area high, and so it's the idea there is that we're avoiding polluting the value area high look with other with the way that the order flow looks in other locations. All right. Should and do are two different things, though, so we'll see. And part of the dilemma is right now is that the markets are pretty crazy, and so it can be difficult to get a clean answer because there's an extra dose of randomness that's thrown at the system right now. So all right, so to answer that question, let's just go back one step here. The low vol, the orange is going to be bar. The bar is going to be orange, where I'm going to make a prediction. Okay, and we're trying to very carefully choose our spots, and we don't. These bars are not orange because while there is a low volume node here, it is too close to the point of control. Right. The point of control is the place where the most trading has occurred. The low volume node is a place where only a little bit of trading has occurred. So the point of control, what that means is that there's a lot of buyers and a lot of sellers that agree that that's a good place to do business. All right. So it can act as a ceiling or a floor. All right. Any point can act like that. Right. You're seeing in this case where it burst through, basically, or it acted as support, and then the market took off, and so now you're making this you're drawing this conclusion that it acts as support. That's not the case. It did in this instance here, or it looks like it did. the point is that at the point of control, the predictability, it goes down. We can't tell as well what's going to happen because we know there's lots of buyers and sellers that have traded here, and we don't know their current position. We know the market spent a lot of time here, and we don't want to enter where the market spent a lot of time. We want to enter where it's not spent a lot of time and have it move back to where it has. So we're typically looking, at some place like this, for the move to here. Okay, we're looking at, if the market gets back down to here, we'll be looking at there or here, or at the edge. All right. When the market gets to the edge, it has to make a decision. It's either going to blow through it, like you see here, or bounce off of it, like you see here. Those are the two highest probability things that'll happen. All right, so that's why those bars are orange. That's where we're making predictions. All right. Sometimes it'll start to go sideways and it'll build volume there, and that's just life as a trader. All right. But for the most part, it does one of these two things. And so what we do is when we get there, we use the machine learning system to make that prediction for us. So we're not trying to say when you get to the value area edge, look for the short, it bounces off. That's not what we're saying. So when we get there, okay, now let's have the machine learning system examine the order flow patterns and make a prediction. In the current environment, where it's really noisy, we're really strict on what that signal has to look like, what that pattern has to look like. So all of these bars are coming back, don't do anything. There was a short right there. That's it. Out of what we see on the screen here, which is 25 minutes, there was only one instance where we got near a low volume node or near the edge where the machine looked at it and said, okay, do something. Here's an instance here on the left, okay, where that simplified version of price action that I'm using as the trigger to make a prediction worked better than the current production method, because that's a 127 long, and that market, you can see the market is popping higher. All right, but for the most part, what I've seen is that the edge is a more complex area than a low volume node, and so we need a more complex view of it than what I'm testing here. All right, so we got long there, way up here at the edge. As a human, this is not a trade I would take. We got to the 10 tick, so stop is entry -5 now. No, I'm not making excuses. It's just, sometimes you see a trade and you go, gosh, I would never do that, and then the market just, it turns out to be a banger, and you're going, wow, this is amazing. Other times you go, like I said, the market it's moved up to the highs, it's thrashing sideways, and it's not something I would normally do. So small loss there while we learn that. Actually, that's a good point. We actually have all three cases here where you bounce off where did it go? You bounce off the edge, or you blow through it, or here you get up and you start building volume.
NQ holder placed.
Okay, so the sim went short here. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. 228. Okay, here we are at the end of the session here, and my result for the day is minus 50. We'll look at that in just a second. I actually, in the sim is almost 20 points, so we'll look at that because this is sort of exactly the thing that we were talking about in the room, and I think it was on the video, so it'll segue nicely. When I look at this here, this is the live account. I took this short up, this long up here. It's one of those cases where you get nicked, or it's stop management. You move the stop too soon, and they end up missing this little extra piece. The comment I made in the room when it happened was, as a human, I would not take that trade. I don't like that because to me that's clearly sort of going sideways. And something to think about is if we're above the value area high here, we won't take that trade because the wave delta chop avoidance would kick in. I deliberately have that still it doesn't come into effect until you're 1 bar away from the value area edge. So that's something to think about. I haven't seen this too often, so in other words, my point is we could pull that in to avoid dealing with this chop at the edge. So, all right. The rest of this looks very kind of normal to me. I have the really volatile model in place because the markets have been really crazy, but this is not too bad actually. What the action I see here, I like the you're pulling down to this low, and I pushed the wrong button there. Yeah, okay, so we're pulling down to this low volume node, and the system's making predictions there, and then you're doing it again, and you're making predictions there. All these are the right places in my view for the system to be figuring out. Okay, yeah, this is where I want to be looking. There's nothing particularly crazy about this necessarily. This is a pretty big range, so that's a function of the volatility. Where I'm headed with this is I'm wondering if being a little less strict on the signal to noise ratio is something to think of, is something to consider. You get a long up there, but you don't get filled. You would just scratch. And then let's see. Okay, yeah, you're close to the edge here, so this is why you're getting those orange bars. The orange bars mean I'm looking at it to make a prediction. And we get a long here, but then the market goes the other way, so there's no signal. But this is actually just within the window, so I stop at 1240. All right, so I actually like what I see in terms of the result as well, because when the market gets really volatile, if you rewind like 5 or 6 months, we'd either get just killed immediately, or you'd end up making some big gain. And getting killed immediately was fairly something that happened fairly often. I think we worked it out to it's basically a coin flip, and whereas what I'm seeing now is sort of a much more controlled entry here. Let's take a look at the test that's running and see what happened there, and then we'll talk about sort of why that works the way that it does. So same story here. We don't at the edge here is very noisy because I'm taking more trades than I'm taking more looks at the basket than I should to collect data. I think I understand what I want to do here after having watched this live for 2 weeks. Here we're pulling back to this low volume node. The machine is correctly saying don't do anything here or here or here. We do fall through it. Now we don't get a signal here because remember the low volume node, we're either looking for it to bounce or blow through it. And here it's blowing through it, but it's blowing through it right into the point of control. That's this blue dashed line. And so because of that, we're too close to the point of control. I won't take a trade there. So the system says no bueno. Up here, you got, I like that location. I like this location down here better, right? Only because I know what happened. Okay, so we talked about this in the room, I think, as well. The point of control is right here, and so you don't know what's going to happen. You can fully expect it to just rotate around that. So in this particular case, this acts as sort of support, and the market bounces up. So we don't get a shot at it till we get to the edge. And then I'm actually not taking trades until 7:05 here, but that was just looking at the logic of how it's behaving. This actually says to get short here. That's interesting. So you take a loss there. And then here is what we're talking about. All right, now the low volume node signals to get it. What's actually happening is it sees this sharp move down, and it makes a prediction. And the prediction is that move is not going to continue. And so that's why the code is 197. Anything with a 1 is a long. But it's looking at, hey, I see this sharp move down into a low volume node. I'm looking for that blast through. I don't think you're going to get it. In fact, it's not only I don't think you're going to get it. I think the pattern is to go the other way. So get long. So we wait for this an up bar to be safe. Get in right there, and we pick up 5 points, and then it looks like we do an add right there on that break. Okay, we don't get any follow through, so that add takes a small loss, half a point, but the second contract makes 11 points. And then it actually happens again down here, all right, where it sees this 3-bar move down, this sharp move down into a low volume node, and says, I don't think you're going to go through it. Get long. So same thing, get long, pick up 5, pick up 4, and that's going to be the amount. Now the difference here between these two charts is that the actual behavior, the price behavior that we're looking for here and here on this chart that's in Sim is much less complex. It's much simpler. And that's because what we see happen at the low volume node is different than what we see happen elsewhere in the market. The market, it either bounces off or blows through it, generally speaking. All right, and so the kind of price pattern we're looking for doesn't have time to develop. Okay, it does in this case, like right here. There's enough there that the production chart is looking at that, going, "Hey, I want to let's take a look at this here." But for the most part, you're seeing this kind of thing, right? Where you're just immediately bouncing off of it, and then here it's happening again, and you don't have as much time. You don't have as much movement within that space to make your prediction, to understand that this is a place you want to look at. So by combining the fact that you're at a low volume area with a simplified price pattern, and then building a model around that, a machine learning model around that, that's why this worked so well here. Whereas this same time frame, 7:36 and 7:59, almost 8 o'clock, we didn't see those opportunities there. So do you see how I was talking about? Yeah, I like this spot, all right, and that spot right there, we actually get long on the chart that's in simulation, that's in testing, and then again, right, it's actually right there. Sadly, we missed this one. This is the one that you really wanted, right? It doesn't matter because that pullback's so deep, you're going to get taken out. So we see that as a human and go, "Oh, look at that big run," but the reality is you're trailing by 20 ticks, and you're going to get taken out right there. Nonetheless, when you look at it, just in terms of strategically what you want to do, you can see that we're finding the right places to be looking. All right, and the same is true up here. All right, so actually. No, the same is not true. This is the edge, and so what we're finding is that the edge is different than a low volume node. It's a lot more complicated. The low volume nodes, generally speaking, are bouncing or blowing through. The edge is tougher, and in fact, this is, I think, the worst case here, where you're at the edge and you're grinding up the edge, and the edge is moving up with you. So there's just enough volume happening in the market as this trading occurs to expand the value area along with price, and that's really a problem, I think, that has to be dealt with. If we look at this exact spot, 834-ish, over on this chart, you'll see what I mean, because this chart is applying simple price patterns at the edge, and you'll see every time you see a number here, the system's making a prediction, and this is far too many in my view. And so we've got to work on. I think I know what I want to do here now, in a couple of stages. So we'll talk about this on Saturday at the Saturday update webinar, about kind of what the next steps are here. It's pretty clear that the low volume node behavior, if I marry that to the current production system and make no other changes, that I've made an improvement. That's a refinement, and then we can get to work on the edge here. Talk about the edge. The edge is a much trickier proposition there. So again, we'll talk about that at the update webinar on Saturday. All right, that's it for today. Today's Thursday, right? Yeah. So we'll see what tomorrow brings. Last day of the week,